Good morning to all members and also all those who watch my Sunday video updates. Obviously, it's been a pretty tough week, and today, Friday, is the worst of them all. So I thought it was appropriate to provide you with a perspective about how you should think about where we are right now, and also where the opportunities are going forward. So, look, at the moment, there is just no logic to what is happening, but logic will return. That this is just emotional selling that has already gone too far from a fundamental valuation point of view, but may go further. No one has any idea because this is a panic because there are multiple uncertainties. But we are starting to see signs that some of the bigger players are starting to get interested and buy into this market. And this isn't a recommendation by any stretch of the imagination, but just as an example, today, Fortescue Metals was up about 5% at one stage on a day of absolute carnage. So it just shows you that money will come back into the market. There's no question. But the main message I want to give to you today is that looking forward is the only way to live your life. So what I want to do is to outline how this market crash, because that's what it now is, will unfold in broad terms. Now, I don't know specifically when and where the bottom will be. I know what it looks like. I've been through many of these events since 1987, so I know exactly what it looks like. I know exactly what to cash in on. But at the moment, it's a falling knife and you don't want to try and catch it. Now, the first point I want to make is that whilst this global pandemic is getting obviously everybody's attention, and there's a lot of horrid press, and it's really going to restrict our free movement. This is not as bad as the GFC, where the world's global financial system was within a whisker of complete meltdown, or the tech wreck in 2000, because then there were fundamental reasons why the market should fall a long way, and it did. Where we're at the moment in terms of realistic fundamental impact is not even close to 2008 or 2000. This will prove to be a setback, and that's it. There will be truckloads of 50 to 100% rebounds in very short periods of time. There always are, and I'm going to show you a couple. The S&P, coming out of the GFC, the S&P rose 260% over 5 years. So if you were able to, buy back into just a broad index, you would have done incredibly well over the next 5 years. So right now, where we sit, it's too late to sell. And, unless you've got really low quality stocks. If you've got low quality stocks, it's likely they're going to continue to fall. And it's also possible that they may never recover. So I'm only talking about good quality stocks here. So with those, it's too late to sell. Just hang on to them. Let your existing quality holdings rebound over time. Now, that might be 3 months, 6 months, 2 years, no idea, but just let it happen. And then what you want to do is to use cash to buy what will be some of the bargains of a lifetime when the time is right. And then use that to accelerate your overall portfolio recovery. The key here is not to go too early. Don't be too anxious and impatient to get into the market, because as we saw in 2008, the market hit a low in November, bounced, and then went down for another 4 months. So, you don't want to be too early here. The very best opportunities will become evident in very short time windows. And I'll show you a trade that I did on BHP in 2008, which was, very successful in a very short period of time. Now, if you rely on the media or your own gut feeling to tell you when the time is right, to get back into the market, you're probably going to be woefully late. So it's really important to be absolutely clear on what stocks you want to buy, be monitoring them pretty much every day, and be prepared to move very quickly. I saw a massive BHP reversal and I acted on it intraday, and it worked out extremely well. Went up 50% in a week and I sold it. What will happen now? Well, let's go and look at the charts and I'll try and give you an idea of how things are likely to play out. But the first thing I want to do is just look at the S&P index. So this is a weekly chart, and this is basically the decline from August, September of 2007 down to the bottom during the GFC. And the bottom occurred in the middle of March 2009. The S&P index hit new highs by February of 2013, so that's back over here. But obviously it made a pretty meaningful rebound. It rebounded nearly a bit more than half of that by April of 2010. So there was a pretty strong rebound, and a lot of stocks did much better and much sooner. One of the sectors that did really well was the gold sector. So this is GDX, which is the world's largest gold stocks. So this was the GFC. So the decline from around March of 2008 down to the lows, but the lows occurred in October of 2008, not March of 2009. So the gold market bottomed 5 months ahead of the S&P. It set new highs by September of 2010. So that's new highs from where it was before the GFC. It gained 290% in 7 months, and it gained 410% in just a tick over 2 years. Now, again, this is an ETF. There were stocks that underlying stocks that did far better than that. So what you've got to grasp here is your losses have happened with your quality stocks. They've been sold down unreasonably and irrationally, and at some point in time they will come back. So you just leave those. Try and divert your attention away from those stocks. What you want to do now is to look forward to what it is that can help you accelerate the overall recovery. Okay, so if you're wringing your hands, stop doing it and just look forward and get positive, because there's going to be some amazing bargains come out of this. So that's GDX, bottomed 5 months before the index and went up very, very sharply. Let's look at BHP. So BHP, again, this is the bottom in 2008, and the reversal occurred on the 21st of November, a month after the gold stocks, but nevertheless well before the Australian market index. So we bottomed in 2008, and BHP had set new highs by by September of 2010, so just under 2 years. Opportunities that are going to present. And this right here, which was the 21st of November, was when I bought BHP intraday. I paid just under $20, and it went up in the space of a week. It was trading up at $28. Now, you have to be very, very fleet of foot to catch those sort of moves, and I'm not suggesting that I'm going to be able to do that again. But I'm just using that as an illustration that some of the world's best stocks are going to do this. And this was out of the GFC, which was fundamentally a far more serious event than what we've got now. No matter how much this virus escalates, the GFC was a lot worse than this. So they're the opportunities that are going to present. Let's look at Apple. Apple bottomed in October of 2008. It formed new highs 1 year later. That's new all-time highs in October of 2009. And it had gained 235% if you were able to buy somewhere near the lows during that time. So they're the sort of potential returns you can make in some of the world's best stocks. So I'm not talking here about going into speculative small caps to make really outsized returns. You just don't need to do it. You just need to understand what stocks it is you want to buy, the ones that are almost certainly going to rebound the soonest and pretty hard. So that's the message. I could just go on and on for hours and hours and show you multiple examples, but I think you get the point. And I'm in the process now of putting that list together. Okay, so just some facts on the coronavirus. And I don't want to try and downplay this, because I know that there's an awful amount of emotion out there about this. And that it will certainly escalate and the numbers will get bigger. So I don't deny that. But let's just look at the reality of where we're at now, because China has managed to contain pretty well, and their numbers of new cases in China is sort of down to like about 10 a day. And, factories are going back to work. So the containment measures in China seem to have worked. But let's look at where we were at as of yesterday. So these are facts. The total number of infected cases globally was 114,000, of which 81,000 were in China. Of those, more than half, 64,000, have already recovered or been discharged from hospital to complete their home quarantine period. Global deaths as of yesterday stood at just over 4,000, with 3/4 of that in China. The China containment measures appear to have worked. Factories are reopening, and there are ways of monitoring things like the electricity consumption in China, the number of cars on the road, all those things. That data all seems to be supporting the facts that are coming out. Now, compare those numbers with the US. In 2019, the normal seasonal flu infected 45 million people in the US, hospitalised just under 1 million people, and killed 61,000. 27,000 died in America in 2019. So across those 2 years, 88,000 people died, and not a sound from the media. So far, in this epidemic, the COVID-19 epidemic in the US, they've got 550 confirmed cases and 22 deaths. Now, those numbers will go up, but come on. Compare 550 and 22 deaths with 45 million people infected and 88,000 deaths. This is not even remotely on the same page at this point in time. So, let's just keep things in perspective. And the share market reaction has just, been extreme and extraordinary. And there are some dynamics going on, particularly to do with the spiral up in the ETF market. We're now getting a spiral down. So it was a self-propelling momentum move to the upside. It is now a self-propelling move to the downside. It's illogical. It's just going to play out, and markets will reach a new level, and that is when the buying opportunities will present. Now, again, let me be clear. I don't know when that is, but I do know very, very clearly what it looks like. So just to wrap it up, this is overkill at the moment, but logic will return and great stocks will rebound. We need to capture some of that. We can capture some of that, and that'll make a significant contribution to the recovery of your portfolio. Buying near the bottom is tough. I don't dispute that. That trade I made in BHP in 2008 was one of the toughest trades I've ever had to make. And it requires a lot of experience. You've got to have gone through these events a few times, and it requires a lot of conviction. Most people are going to need assistance with that. I intend to ensure that all my members have those opportunities presented to them in a very timely manner. The worst thing that you could do right now is to sell quality holdings and switch off. Hate the stock market, it's all too hard, never want to have anything to do with it again. That's the worst thing that you could do. You need to have faith that there'll be spectacular recoveries in great stocks. because there will be. Always have been, always will be. You just have to be prepared in advance, and you need to be ready to act very quickly. If you're an existing member, sit tight. I'll keep you informed every step of the way. If you're not a member, I urge you to jump on the portfolio analyst trial and start your preparation. Do it today, because I don't know when this bottom is going to be. It might be next week. It might be in 3 months' time, but you need to be prepared. Just finally, keep looking forward. Don't look back. Don't agonise over what's happened to your portfolio. Look at the opportunity that's going to present. I hope this helps, and I'll speak with you on Sunday. Cheers.